Welcome back to Block Tickers, the show where we dig into earnings calls and try to figure out what's really going on.
Stories behind the numbers, right?
Yeah, exactly. And today's deep dive, Uber's Q3, it's a bit of a head scratcher. I mean, on the surface, things look great, record profits.
Growth is solid.
But the stock, it took a nearly 10% hit.
Down 9.29% to be precise.
So, yeah, we got to figure this out. What spoofed investors? What does this mean for Uber going forward?
It's definitely an odd situation. You've got a company posting over $1 billion in GAAP operating profit for the first time.
Ever,
yeah. And gross bookings up 20% year on year. Usually that's, cause for celebration.
Yeah, not a sell-off.
Yeah.
So let's break this down. Starting with that record profit. For those of us who aren't, finance wizards, what exactly is GAAP operating profit?
Right. The jargon can be a bit much. Basically, it means the profit Uber made from its actual operations. So stripping away things like taxes and one-time accounting adjustments, it gives you a clearer picture of the core business. And for Uber, a lot of this profit comes down to their focus on efficiency. They've been streamlining, optimizing costs, and it's clearly working.
Yeah, and this comes after, we saw those rising expenses.
Especially those insurance costs.
Yeah, those pesky insurance costs.
Right, which we'll get to later. But to navigate that and still hit record profits, that's impressive.
Definitely resilient. But profit is only one piece of the puzzle, right? You mentioned that 20% jump in gross bookings. That's essentially the total value of all the rides and deliveries, correct?
You got it. Gross bookings are the lifeblood for a company like Uber.
Okay, so does this mean both mobility and delivery are doing equally well?
Yeah, both segments are performing really well. They're seeing more users, and those users are using the app more frequently, which is exactly what you want in a platform business.
Makes sense.
But here's the thing. It's not just those big, dense cities driving the growth.
So this is where their push into those less dense markets comes in, those suburbs and smaller towns.
Right.
I'm curious, did they give any specifics on how they're tailoring their approach for those areas?
Well, it's all about density, but in a different way. You see, in those less dense markets, they're focused on getting enough drivers and riders to make the service reliable.
Okay.
Getting those wait times down, making sure there's plenty of choice on Uber Eats.
Right.
It's about reaching that critical mass where the platform becomes indispensable, even without the hustle and bustle of a city center.
Yeah, that makes sense. You need that network effect.
Exactly.
More drivers, happier riders, which attracts more drivers. It's smart, tapping into a customer base that maybe didn't consider Uber before. But density isn't just about geography, is it? Their Uber One membership, that seems to be doing really well.
Oh, Uber One is a fascinating case. They've got 25 million members globally now.
Wow.
That's a 70% increase from last year. Clearly, people are seeing value in bundling those ride discounts, free delivery, and even the grocery perks.
It's smart. It creates those loyal customers.
Exactly. They use the services more often.
It's that stickiness. Once you're hooked on the convenience, the savings, you're less likely to switch.
Right.
But speaking of adding new dimensions to their business, let's talk about their advertising. Almost 80% growth year on year.
Yeah.
That's not insignificant. What are they doing right?
It's interesting. They're not just slapping banner ads everywhere. They're experimenting. Sponsored listings for grocery products.
Okay.
Pretty standard in e-commerce, but new for Uber.
Right.
And then there are the journey ads that pop up during your ride. Imagine you're heading to a concert and an ad for a nearby restaurant pops up offering a discount.
Oh, yeah, I've seen those. They're more subtle, more integrated than the typical ad blitz you see on other apps. But it does make you wonder, how much is too much? Could this backfire if riders feel bombarded?
It's a tightrope walk for sure. But so far, it seems like they're striking a good balance. They've really emphasized prioritizing the user experience and those high-quality ads. And it shows those click-through rates, they're 2 to 3 times higher than the industry average.
So they're grabbing attention.
They are.
Okay, so record profits, expanding reach, growing membership, building this advertising thing. Sounds like a dream scenario. So the big question is, why are investors hitting the brakes? What's the catch?
That's the paradox we need to unpack. And the answer might be in a few key areas, starting with those rising insurance costs we talked about earlier.
Right, insurance has been a headache for a lot of companies.
It has.
How much of an impact did those costs actually have this quarter?
Yeah.
And is there any relief in sight?
Well, it's important to remember that these cost increases, it's mostly a U.S. issue.
Okay.
And while it did contribute to some price hikes and a slight dip in transaction growth in certain markets, the rate of increase It seems to be cooling down.
Okay, so that's a glimmer of hope, maybe. But what else could be worrying investors?
Competition. That's always a factor, especially in an industry that moves as fast as this one. The rise of robotaxis,
Yeah.
players like Waymo, Tesla making waves, that could be making investors nervous.
Right. And Uber, they've been doubling down on their own autonomous vehicle strategy.
Yeah.
Especially that partnership with Waymo. Didn't they just announce an expansion?
To Austin and Atlanta.
Yeah.
Big deal. It shows they're serious about AVs, willing to put their money where their mouth is.
It's a significant commitment.
It is. They're not just dipping a toe in the water, they're diving headfirst.
That's a great analogy. And it fits with what Dara Khosrowshahi has said about wanting Uber to be the go-to platform for AVs. He even mentioned having 14 different AV partnerships.
Not just Waymo.
They're hedging their bets.
Casting a wide net, smart move in such a dynamic industry. No one knows for sure which AV technology will ultimately win, so partnering with multiple players gives them flexibility.
Valuable insights, too.
Exactly.
So it's about building a diversified AV portfolio.
You could say that.
But going back to that Waymo expansion, what kind of impact could that realistically have on Uber's business in those cities?
It's hard to say for sure. Right now, the number of Waymo vehicles operating in Phoenix, where the partnership started, it's relatively small. They're not at a scale where we can see a real impact on Uber's overall ride volume or revenue.
So more of a pilot program at this point.
Yeah, I think so.
But if those launches in Austin and Atlanta are successful and they scale up, things will get really interesting.
Absolutely. Imagine hundreds of Waymos on the streets, integrated seamlessly into the Uber app,
Potentially reducing Uber's reliance on human drivers
leading to better efficiency, lower costs.
and potentially disrupting that driver-rider relationship that's been so core to Uber's model. It's a lot of potentialities, but it's clear that these partnerships could have some pretty big implications for Uber's future.
And those implications go beyond just ride-hailing. Remember, Uber's also heavily invested in delivery. AVs could play a huge role there, too. Imagine your groceries delivered by a self-driving car.
Now that's a future I can get behind. No more tipping worries, no more awkward small talk.
Right, just pure robotic efficiency.
Exactly.
Of course, there are still a lot of hurdles. The technology, regulations, public acceptance of driverless vehicles.
Right.
But the potential is there.
Okay, so Uber's betting big on AVs. And this Waymo partnership is a key part of that. But let's shift gears a bit and talk about another area where they're diversifying: advertising.
It's a natural evolution for any platform with Uber's reach and user engagement. Millions of users spending time on their app. That attention, it's valuable.
It's like they've built this digital highway, and now they're putting up billboards along the side.
That's a great way to put it. And what's interesting is that their strategy, it goes beyond those traditional banner ads. They're integrating advertising into the user experience in a way that feels natural.
Even beneficial.
Right.
You mentioned those journey ads, the ones that target riders during their trips. Are those the ones with the really high click-through rates?
Those are the ones. They're seeing click-through rates 2 to 3 times higher than industry averages, which is pretty incredible.
It is.
It really suggests that riders are paying attention, they're finding them relevant.
And Uber has been careful not to overdo it.
Yeah.
They've said they're curating the ads, keeping that high-quality user experience.
Exactly. They're being selective.
So it's not just about maximizing that ad revenue.
It's about building a sustainable advertising ecosystem, one that benefits both Uber and its users.
It's a smart, long-term approach.
It is.
Okay, so before we go any further, let's focus on something that might be particularly relevant to our listeners, especially those thinking about investing in Uber.
Okay.
Their capital allocation strategy. Specifically, their approach to buying back their own shares.
This is where things get interesting, because while Uber is reporting these record profits and laying out these ambitious growth plans, their announcement about steadily increasing share buybacks over the next few quarters, it's raised some eyebrows.
Why is that a concern? I mean, share buybacks are usually seen as a good thing, right? Returning value to shareholders.
They are, but the timing and scale of these buybacks, especially considering Uber's focus on investing in, in future growth, some people are questioning their priorities.
So is it a case of trying to have their cake and eat it too?
Yeah.
Investing heavily while also trying to keep shareholders happy with these buybacks?
That's one way to look at it. Some analysts see it as a way to artificially boost those earnings per share
Okay.
and distract from potentially slower growth in their core ride-hailing business as the AV landscape evolves.
Well, it's a tough balancing act.
It
They need
is.
to invest in those future growth areas to stay competitive.
Yeah.
But they also need to keep investors happy, and buybacks are a proven way to do that.
And let's not forget, they've committed to a pretty significant share count reduction in 2025. What a bold statement.
It is.
It suggests that they're confident in their ability to generate enough cash flow to fund both buybacks and those investments.
It's a risky bet.
It is. If those investments don't work out, those buybacks could come back to haunt them.
So what's the takeaway for investors? Is Uber's capital allocation strategy a good sign or a warning?
It's probably too early to say for sure. Only time will tell if they can successfully balance those growth ambitions with their commitment to shareholder returns.
It's a storyline to keep an eye on.
Definitely, especially as they navigate this increasingly competitive landscape.
Well, folks, we're going to pause our deep dive here for a moment. Don't worry, we'll be back with part 2, where we'll unpack more of the key takeaways from this earnings call and discuss what it all means for Uber's long-term prospects. Stay tuned.
Welcome back to Talk Tickers. Before the break, we were talking about Uber's capital allocation strategy and those interesting share buybacks. But let's shift gears for a minute and go back to one of Uber's main growth strategies.
You mean their expansion into those less dense markets?
Exactly. Those suburbs and smaller towns. This could be a huge opportunity for them, especially with those areas growing faster than those, big city centers.
It makes sense. Everyone always talks about the urban markets, but there's a ton of potential customers in those suburbs where a car's almost a necessity.
Right. And that's where Uber can really make a difference, offering a convenient and affordable option.
Exactly.
And they're not just, copying what they do in the big cities. They're adapting. Remember when Dara talked about actively investing in improving selection in those areas?
Yeah.
That probably means getting more drivers, expanding those restaurant partnerships for Uber Eats, even tailoring their marketing to those specific communities.
It's all about localization, making sure Uber feels relevant in those contexts.
Right. And as they build that density, you get that network effect we talked about earlier.
More drivers, more riders. It feeds itself.
Exactly. It's like a snowball. This strategy could drive their growth for years. And remember, it's not just about mobility. They're doing the same thing with delivery.
Yeah, expanding Uber Eats beyond the cities, it's a no-brainer.
Yeah.
I imagine the demand for delivery in the suburbs is just as strong, maybe even stronger.
Absolutely. Uber Eats actually started in dense urban areas, but they quickly realized that less dense markets had even more potential. And they've been expanding their reach systematically, building out the delivery networks, partnering with local restaurants.
It's like they're creating a whole new Uber Eats world.
Exactly.
Yeah.
Tailored for those suburban cravings.
It's fascinating how they're replicating their success in these new environments. But I want to go back to those autonomous vehicles for a minute.
Okay.
They're partnering with, 14 different AV companies?
14.
That's impressive, but are we seeing any real impact? Like, how many cars are actually on the road?
Well, it's a mixed bag. The Waymo partnership in Phoenix, it's promising, but it's still pretty small scale.
Yeah.
However, expanding into Austin and Atlanta, that's a clear sign of their commitment. It'll be interesting to see how those markets develop.
But what about those other partnerships? Are any of them making a difference?
Most of those are still in the early stages, lots of pilot programs. But remember, Uber's strategy is about diversification and learning. Think of it as a series of experiments, seeing which approach works best in different situations.
So they're not putting all their eggs in one basket.
Exactly. They're gathering data, refining their platform, and getting ready to be a leader no matter which technology wins out.
It's a long game, and they're playing it smart.
Exactly. And don't forget the experience Uber brings to these partnerships. They've spent years understanding ride-hailing logistics, managing drivers, optimizing routes. That kind of knowledge is really valuable to these AV companies who are still figuring things out.
So it's a good match.
I think so. Uber brings the infrastructure and the know-how. The AV companies bring the technology. It's a win-win.
So it's not just about the cars themselves.
Right. It's about the whole ecosystem. And that's where Uber's experience really matters.
Yeah, it's like they're laying the groundwork for a transportation revolution.
A world where ride-hailing is seamless, efficient, maybe even more affordable.
It's a bold vision, and it's going to take a lot of work and investment to get there. But with Uber's history, you can't count them out.
Absolutely. And remember, they're not just focused on the future. They're making smart moves in the present, too, like with their advertising strategy.
Right, that digital highway with the billboards.
Exactly. It's clear they're having success with those journey ads and sponsored listings. But I'm still curious about, how consumers are reacting. Are they really engaging with those ads, or are they just ignoring them?
It's a good question.
It's still early, but those high click-through rates suggest that they're finding a way to get people's attention without being too annoying.
Yeah, they're being careful with it.
Right. They're curating those ads. They're working with brands that fit Uber's image.
It's a strategic approach,
It is.
not just throwing things out there to see what sticks.
They're building a system that works for both Uber and the users.
Right.
And if they can keep that balance, their advertising business could become a major source of revenue. Maybe even offsetting some of the uncertainty around their core ride-hailing business as those AVs become more common.
That's like an insurance policy.
Exactly. They're creating a revenue stream that can provide stability and growth no matter what happens.
It's a smart move.
It is. One that could pay off big time.
All right, so we've talked about Uber's expansion into new markets, those big bets on AVs, their advertising strategy. They're definitely a company that's always moving. But as we go into the final part of our deep dive, I want to come back to that question that's been hanging over us.
Why the stock drop?
Yeah, why the drop? We've seen impressive performance, big plans for the future, but the market doesn't seem convinced. So let's try to figure out what's going on. Welcome back to Talk Tickers, everyone. We've spent the last two parts of our deep dive really digging into Uber's Q3 earnings. And honestly, it's been a bit of a puzzle. Amazing numbers, a clear vision for what's next. But that stock drop keeps coming back to mind.
Right. We've been trying to figure out how to reconcile all the good stuff with the market's reaction. And I think, honestly, part of it comes down to how Wall Street thinks. They're so obsessed with short-term results.
Yeah, that show me the money mentality.
Exactly. They see a company investing heavily in new things like AVs, and they get spooked. It's like they're missing the bigger picture.
It's like they're just looking at one piece of the puzzle instead of the whole thing. But with a company like Uber, you can't just focus on those quarterly profits. They're changing the game,
Yeah.
You got to play the long game.
I agree. And I think Uber's leadership gets that. They're not just sitting back and enjoying the profits from their current business. They're putting money into those future growth areas, AVs, advertising, new markets to make sure they stay on top.
Makes sense. So if we had to sum up the key takeaways for our listeners today, what would you say are the most important things to remember about where Uber is headed?
Well, I think the first thing is their core businesses, mobility and delivery, they're doing great. Growing, profitable, and expanding their reach, that's a solid base to start from.
Yeah, it shows how strong their platform is and that network effect we talked about.
Right.
But like we've been saying, it seems like the market is more worried about those potential disruptions coming, particularly with AVs.
And that leads us to the second takeaway. The AV revolution is happening, whether people are ready or not. And Uber's setting themselves up to be a leader, not just by developing their own technology, but by working with a bunch of different companies.
Right, they're hedging their bets, learning from everyone, and building what they need to support AVs when they really take off.
Exactly. And let's not forget the third key point, diversification. They're not just relying on one thing. They're branching out into new markets, new services, building that advertising business.
They're making themselves more adaptable.
Right. Less vulnerable to any single disruption. But like we discussed before, that growth strategy isn't free. They're making big investments, which brings us to our fourth takeaway, capital allocation.
It's that balancing act for every company.
Right. How much do you invest in the future versus how much do you give back to shareholders?
Yeah.
And Uber's choice to increase those share buybacks while also putting so much into new ventures. Well, it's definitely gotten people talking.
It's a bold move. It shows they're confident they can generate enough cash to do both. But it could also be a mistake.
Yeah, if those investments don't work out, they might regret those buybacks.
Only time will tell.
Exactly. But that's what makes following Uber so interesting. They're not afraid to take risks. They push boundaries. And they're willing to disrupt themselves before someone else does.
So the final takeaway, I think, is this. Uber's story isn't finished. There's a lot more to come. The market might be caught up in the short-term ups and downs, but we think the long-term potential is still huge.
I agree. They're leading a revolution and they're thinking long-term. For investors who are patient, who can handle a little uncertainty, Uber could be a really exciting opportunity.
Well said. And with that, we want to leave you, our listeners, with something to think about. Considering everything we've discussed, the performance, the market's reaction, those growth plans, all those unknowns, do you think Uber will get back on track, get that investor confidence back, and see their stock price climb again? It's a question to consider as you keep following Uber's journey.
And remember, the most important thing is to stay informed, stay engaged, and stay curious.
And that wraps up our deep dive into Uber's Q3 earnings call. We'll be back soon with another Talk Tickers episode, breaking down the latest earnings reports and finding those stories behind the numbers. Until then, happy investing.